Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. We are currently in the throes of a weather-based volatility market, and just as the market made a very strong radical move to the upside, we can see on the other side the market has since made a very big move to the downside. The market currently just bounced off of support near 368, but of particular importance is the way in which the market responded off of our point of control. At 378, we can see the market actually made a nice little gap movement across that 378 number. And in doing so, the market moved down and subsequently continued lower, filled the gap, but ended up closing at the lower end of the day's trading range. Today, we find the market sitting at one of our quartile levels for support, again near that 368 number. Yet just above today, we can see a slight bit of resistance occurring for where the market's making its highs intraday. From here, we anticipate that even if the market were able to make its way up to about 378 or back up to the point of control, continued weakness or at the very least some sideways movement is what we're anticipating seeing over the course of the next few days. We also have volatility-based support that sits very close to that 368 number that we discussed. The first time the market tested it after falling off of having had very good resistance overhead, tested that 368 number and bounced from there. From here, we see the market came back into volatility-based resistance, has since fallen back down again, and once again, we're seeing a nice test of volatility-based support where the market was able to reverse off of that level. Right now, we anticipate 383 or 382 is going to be good resistance for this contract in the event that it goes to that area. And from here, depending on how it responds to this 382 half number, above this number, we anticipate continued strength and below continued weakness. For now, at the very least, since we recently have touched volatility-based support, we think over the next 5 to 7 trading days, we could very well see a nice little sideways movement instead. The December contract is giving us a similar movement where we can see that last week's high came in right up against our quartile level. The market broke through the mid-quartile level, and we find support right now at 1/8 division of those quartile divisions. The market came in, found support here, and you can see where the previous lows of the past, at 378 and a quarter, continue to be reasonable support as they have been for quite some time for this contract. The potential time factor that we're currently looking at is for this market to perhaps end its consolidation or its volatility period somewhere in the neighborhood of the first or second week of August. In doing so, we can then see the market perhaps find its way inside of a trend once again. The low today was just shy of volatility-based support as the market came in. It came in very close to that area and then reversed back up again, as did the September contract. We also have a key level at the 180-degree mark of 382 and 3/4. And from here, as long as the market's able to hold above, we think a retest at least a midway of this current range is plausible. Similar to the previous chart, we also have the early to mid-August timeline as a potential time factor where this market can perhaps finally terminate its sideways movement that we've seen recently. Soybean futures have been holding up fairly well, considering that it has not given up the vast majority of the gains that we saw over the past couple of weeks. The market came in, and now we're looking at about a 33 to 38% give back of the current movement, and it's currently trading inside of a range of about 984 to 1038. From here, we anticipate that the market could very well get some legs and continue higher as long as it's able to hold above this 984 number. Below 984, that's where we can potentially see some weakness, but this 984 level, once again, looks to be like a good level for us to use as a node for this contract to give us insight as to whether continued strength or continued weakness are on the horizon. We're currently in the third leg of its recent correction, where after having made its top a couple of weeks ago, we got the first leg down, which would be our A or first leg. We have a B correction here, which came in about 78.6% retracement. And now we're in the midst of a third and potential final leg, where even if the market were to come in and test somewhere in the neighborhood of 965 to 968, that could be a good potential support level from which the market can bounce from. In breaking this area or in breaking below 965 and finding weakness from there, that would cause it to be in jeopardy of giving back much of the gains that we saw previously. And so we're looking for the market to really hold above this 960 to 965 number to see whether or not continued strength is probable. Coincidentally, that 960 to 965 number happens to be right up against our 180-degree time factor of 966.5. And so once again, we really would like to see the market hold up near this area. Additionally, we'd like to point out that our sinusoidal wave appears to have been very good support for this contract, just as it seems to be resting up against volatility-based support. So as long as this market stays above this 180-degree mark, we like this market having the potential to break back above our 360-degree mark, which would be at our 1029.5 number. If and when it's able to get above this number, a near-term target of a minimum of 1062 is possible from there. The November bean contract has very much the same pattern. And the key target that we'd be looking for here is somewhere in the neighborhood of 972 to 975. Upon coming back inside of here, what you would essentially see was a one-to-one correspondence from the previous move. And even if the market were to come in and hit close to about 970 or so, we think a bounce from this area is quite possible, and from which point the market can move up and make a new target upside. Currently, we have support ranging in the neighborhood of 970 to 984. And the market coming inside of this area looks like it wants to continue to bounce off of support just as it did previously. In doing so, upside target then that we're looking at is potentially overhead in the neighborhood of 1063 or so. Wheat futures currently sits at a very critical area. The first important area of support that we were looking for came in near about 500. The market did not hold up against this number here. As we can see, the market broke through. In fact, it gapped down and has yet to fill that gap that it created from that initial breakdown. From here, the market has since dropped down to the wave one high potential, and this is where we find ourselves with potential support. Given that this is a futures contract, we do have a bit of leeway in qualifying where this key support level actually lives, but not much lower than this 474 to 473 number. If the market breaks well below this number here, then the current formation that we're looking at as far as an Elliott wave sequence is broken, and the market could very well find itself in a position where it continues to collapse to the downside. The point of control for the September contract currently sits at 462.25, and this looks to be really the line in the sand. If the market breaks below here, then a run down to 430 is perhaps quite probable. The support that we are seeing over the last 2 days happens to land right up against our sinusoidal wave. In addition to that, we're sitting up against the 477 mark, which is a 180-degree natural level. From here, if the market's able to find good support and at least consolidate over the next couple of days, it has the possibility then to potentially find its way back up again. But as mentioned before, we're currently sitting at a very key threshold where continued weakness would not be healthy for this contract. The Elliott Wave 1 high for the December contract gives us a little bit more leeway than the September contract did. And so here we have a little bit of room in terms of cushion before violating that Wave 1 high. From here, we can see the market is in the midst of a very big and very deep correction. And we're looking for the market to even potentially consolidate inside this area here, coming into our August 28 timeline before the market can potentially find some legs. It is possible that the market could very well turn up from here. And if we find continued weakness below this 490 mark, could very well look to retest previous lows, breaking below the 450 mark. So again, like the September contract, we sit at critical levels to determine whether or not this market's really able to hold itself up. From this perspective, we can see that we're up against a 180-degree factor of 496.5, as well as volatility-based support. And so those two coming together right now could very well set itself up to find a little bit of consolidation over the next 5 to 7 trading days. From there, depending on how the market reacts, will be telltale, and we do have a mid-October timeline for potential change in trend, or at the very least, a small time factor coming in near that mid-August timeframe. Cotton continues to find trouble at our 50% retracement level that sits at $69. If and when it's able to get above this number here, we anticipate a move upward that at least tests 70, 80 and change is possible. But for now, the key level that this contract needs to get through is the 69 mark. And what we would be looking for are 2 to 3 closes above this level to give us clear confirmation that potential strength could continue from here. As far as the US dollar is concerned, we had given you two key projections in terms of price after breaking below 96.64. We suggested that if the market was not able to hold this support level, that a minimum price objective of 95 and change was possible, and from there going down as far as 93.42. The market has not only reached our 95 and change target, but is now testing and has reached the 93.40 price objective. The market continues to have weakness and don't anticipate the market really finding good support in the near term. From here, we'd simply be monitoring to see how the market responds. It is extended, and we could see a short-term bounce or sideways consolidation, but the dollar does appear to be in quite a bit of trouble for now. In closing, we'll take a look at the September crude contract. We've been suggesting that a minimum price objective of about 49 and change was possible, and the market is very close to hitting that price. After having struggled just a little bit at that 61.8 expansion level of 47.07, the market was finally able to break through. We are now really at the throes of testing that 49 number, and if and when this market's able to get to 50-50, closing above this number would suggest a confirmation of potential uptrend, and we could see crude oil at the very least retest and break previous highs and continue higher from there. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.